Yeah, it's your boy Crypto Blood. Welcome to another episode of My Two Satoshis. It is April 2nd, 2018. I almost wanted to say March. Hope you guys are doing okay today. It is Monday, start of the week. I want to give a shout out to John Craig. He sent me an email saying, got a song request for you, young lad. I haven't missed a single video of yours in 9 months, so I know you like hip-hop and rap tunes. Alas, I'm white and Irish, so I'm asking for Salt-n-pepa Push It, as this is as American gangster I got growing up. I was too busy being Irish gangster instead. That's what's up, man. Shout out to my Irish brother. Thank you for the song request, and we are rocking out to that Salt-n-pepa, man. I remember listening to this when I was growing up in the late 80s, early 90s. This was a hit. They played it on the radio for years after it came out, so brings back memories, man. I appreciate the song request. So people, today we are going to look at the market, see how we're doing, look at the algos. Seems like we bounced off another support area, another S1 or S2 or whatever you want to call it at this point, but market cap is at 263 billion. Bitcoin's dominance is at 45.3%, and green all over the place. Very big green day today for the top 100 tokens. And let's take a look at my algo. So still long, and this algo here for Bitcoin USD is more of a swing trading algorithm. As you can see, average bars in trades 167. So we're talking about, what's that, on average about a week, like 6 days, 6 days on average. The positions are open. So definitely a swing trading characteristic for this algo. Now the ones I'm working on for Litecoin and Ethereum trade much more frequently. So just kind of give you guys a heads up on that. However, still looking long here. We had a nice bounce off of on my manual TA chart. You'll see right near the 6600 area. And we just gotta, I'll get back bullish on this market if we see something above 7400, I just say 7500. So I got to see something above 7500 for me to feel like we're making higher lows and higher highs. So that's pretty much that for today on the TA. But this article caught my eye. Says here, Ethereum developer opens EIP to discuss bricking ETH hash ASIC miners. So it caught my attention because I remember back when I started, this was around the time when there was rumors about ASICs penetrating the script markets or the script coins. Script coins were like our Litecoin, and there were a whole bunch of them back then. That script tokens were prolific back then in 2012, 2013. A lot of tokens, or not tokens, but coins were script coins using the script algorithm. ASICs had already penetrated the SHA-256 algorithm. So mostly, if you were mining Bitcoin even back then, you to be profitable, you had to have ASIC, and so an ASIC rig. And so, like, I remember rumors of, and I was at that point mining straight off a GPU, Litecoin, but then the ASICs hit the market and changed the game, bumped the difficulty rates up. And for years, not for years, but for as long as I remember, that was the whole thing about script. It was like ASIC resistance ASIC resistant, like really highly ASIC resistant. But that changed, you know. These engineers figured out a way to create hardware that mined the script algorithm in a very, very proficient, or efficient, I should say, efficient way. So I think we're at that point again where there's rumors there, you know, ASICs are now able to mine on the Ethereum blockchain, and what that does is creates a concentration of mining power, hash power, in the hands of a very few. So this can be, you know, this is one of the bigger concerns with Bitcoin, in many people's opinion, is that it's not centralized, or fairly, the hashing power isn't fairly distributed, and it's all in the hands of Bitmain and a lot of those companies that are creating these ASICs. And the crazy thing is, I remember when the ASICs started hitting the scene for script coins, when they create them and they figure out a way to, you know, a successful ASIC setup, hardware setup for a particular algorithm, they'll pre-mine it. So they'll mine it in-house and get more, have a higher rate of blocks being found under their own equipment. Then after they've made a whole bunch of money, they'll say, okay, well, I guess it's time, we can make a little bit more money if we start selling these units to the public. So let's see what this article says, though. So it says here, an Ethereum developer has opened an EIP, which is an Ethereum improvement proposal, to discuss whether the community should modify its ETH hash mining algorithm to maintain ASIC resistance. The EIP 958, proposed on GitHub by Ethereum core developer Piper Merriam, formally proposed that improved ASIC resistance be implemented into the network's instance of ETH hash, a proof of work consensus algorithm. He says here, I believe it is the accepted wisdom that ASIC-based mining leads to increases in centralization when compared to GPU mining, Merriam wrote. The EIP is a direct response to reports that Bitmain, by far the largest manufacturer of mining rigs that use application-specific integrated circuit chips, or ASICs, has developed an ETH hash ASIC miner and will begin shipping them within the next several months. So that pretty much means that they're mining it now with those ASIC hardware setups, ASIC mining hardware setups. So it says here, as their name suggests, ASICs are built to accomplish a specific purpose, which allows them to maximize efficiency for a single application rather than general purpose use like CPUs and the more powerful GPUs. So it says here, Bitmain and other manufacturers have already built ASICs for a variety of mining algorithms, including SHA-256, used by Bitcoin, but other cryptocurrencies have attempted to use POW algorithms that are ASIC resistant as well. However, the Chinese firm, which is rumored to have raked in $4 billion in profit last year, has gradually developed ASICs even for algorithms that are less widely used. So it goes on to say here, these fears are not isolated to the Ethereum community. Monero, for instance, has committed to modifying its instance of Kryptonite mining algorithm every 6 months to make it unprofitable to produce a Monero ASIC miner. So I mean, that's kind of the gist of the article. Merriam, it says, the last paragraph here says, Merriam has also requested that EIP 958 be added to the agenda for next week's Ethereum core developer meeting, which is scheduled for April 6th, and it will be streamed on YouTube. So I'll have to check that out and see what the core development team thinks about it. I think article talks about a large majority of the developers are with implementing this new ETH blocking, if you want to call it, the ASIC mining algorithms, or ASIC mining hardware. And I think only about 13% of the voting team are opposed to it. So it probably will pass, but I guess that leads to a question for you guys. Is this the most efficient way to stay ahead of the you know, these miners? I'm sure, you know, they're doing the best they can, and I don't know if any algorithm is ever going to be ASIC proof. I don't think so, you know. And so really that lends to us probably needing to move away from proof of work and toward like proof of stake or some other type of algorithm for these cryptocurrencies and tokens. I just think it will be an ever chasing type of cat and mouse game that the miners play with these projects, these blockchains. So getting rid of proof of work altogether will probably in the long run be the most efficient way. But I want to get your feedback. I want to hear what you guys feel about this. Some of you old school cats, drop me some comments and memories about ASIC hitting the script coins back a few years ago on Litecoin and all those other altcoins that were out at that time. Let me know your thoughts. Make sure you guys like and subscribe. And that is it. I'm out, people. Salt and pepper.